Happy New Year. We're about to kick off 2026, but before we start 2026, let's take a look back at the markets in 2025. So, my name is Tyler Braun. I'm the Director of Financial Planning with the Tranel Financial Group. 2025 was a great year across the marketplace. To think back, right, we had a lot of volatility in the early 2025. We had Liberation Day, we had tariffs, we had different tax bills that were passed. So, all of this unknown really led to a fantastic end of the year rally for equities. We saw the S&P end just right around 17% for gains for the year. So another strong year. It's 3 years in a row of double-digit returns out of the S&P. We saw the Dow Jones somewhere right around 13% for the year from a performance standpoint. That's also 3 years in a row of double-digit returns out of the Dow. So remember, the S&P 500 is a broad index. It's the largest 500 companies in the US. As we look at that, it is led by technology, and technology had another breakthrough year leading the way. We saw returns in tech companies over 30% in 2025. Information services also had a very strong performance, and those two sectors really led the way. What's interesting is we also saw precious metals have a banner year in 2025. We saw gold and silver appreciate over 70% throughout the year in 2025. So we had gold hit an all-time high. We had silver hit an all-time high. Um, you know, when you see the market appreciating the way that it did in gold and silver, it was really one of those pieces where we saw all tides rising at the same time. So what's interesting is with the S&P, there's 10 sectors that make up that metric. All 10 sectors were positive in 2025, but there was a big disparity or discrepancy between top performing sectors and the least performing sectors. So we saw information services and technology close to 30% gains in those sectors, while real estate was only up about 3% for what was trading on the S&P. So it's a huge difference across there. What we're also paying attention to is we're starting to see interest rates decrease. We saw that at the end of 2025. So as interest rates start to come down, it's one of those pieces that typically we start to see a spark with equity growth as companies are more incentivized to reinvest as interest rates and payments start to become less. It also typically puts more cash flow in consumers' hands if they're making less payments to mortgages, car notes, credit card interest, etc. We've also seen from a fixed income standpoint, right? If my arm's a teeter-totter, if interest rates decreases, bond prices typically rise, right? So we're also seeing that on the fixed market or fixed income space from a standpoint of bond prices have been rising as interest rates have been decreasing. So I say all of this to you as we lead into 2026. 2026 is another year of change. Another year of multiple things that we're looking at from an economic standpoint. Some of that being what's going on in Venezuela, what we're seeing going on in Iran, just different international pieces that we're going through. In addition to that, we see tariffs continuing, right? So all of this is in the news. All of this is coming to forefront. This is how we're kicking off 2026. But I did want to take a moment, just look back at 2025. It was a great year in the markets. If you have any questions, please feel free to reach out to us at any time. Once again, my name is Tyler Braun. I'm the Director of Financial Planning with the Tranel Finance Group, and I hope you have a great rest of your day.